So what's the point of this rally today? What was behind it? Okay. So the point I was making was with the giant stimulus package that's coming out now, that we possibly could see as early as tonight or tomorrow morning, it's basically the federal government takeover of the economy until we get through this coronavirus crisis. If that's the case and the economy will be taken care of, then what was the point of this dramatic, gigantic sell-off in the first place? Right? So that's the point of this. So where was I? So what happened today was kind of like a splash. You know, when you drop the bucket into the well and you see the rope unwind and the well is, and the bucket's going down and down and down and down because it has to go so deep to finally get to that water. And it seemed like we were never going to hear a splash. Okay, now, good, thanks. And we finally heard the splash. That's what this was like. Look, we all knew the stock market was way oversold. But something had to turn it around. And there were a couple of things, but particularly the Federal Reserve came out with an open-ended stimulus to pump as much money into the economy as possible. The Fed has done more in the last 2 weeks than it did in the Great Recession. I mean, think about that, just in 2 weeks. So we have that banks, the financial plumbing of the economy will continue. You combine that with the Fed taking over the economy and saying, hey, you know what? We'll just pay for everything while we're going through this sickness. It's kind of like being home when you're sick and your parents are going to take care of everything anyway because you're a kid. That's what it's like. But it takes away a lot of the worry. And if that worry is gone, then I hate to say it, but this whole sell-off could possibly be over nothing economically, not to disparage or take away from the human tragedy that's going on. Okay. So what was today's trading session about? The message for everyone, okay, is that sometimes we have to think about all of the things that can go right and not just the things that could go wrong. That would be a nice change of pace, okay? So this is why we've been repeating. I've been repeating over and over. If you're a watcher of my live stream, okay, if you were a viewer, that's why I say selling everything is not a strategy. Someone says, oh, I went to all cash. I mean, people love to say the silliest things, especially when they don't have to prove it. But some people went to all cash, fine. Are you going to get back in? Because now you have to get back in. And what happens is people say, I'll get back in, but then the market goes up. And people will say, oh, but it's up. Oh, I could have bought stocks lower, so I'll wait till they go down again. And then stocks go down again. And then that same person will say, things are going down. I'll wait. And then they go up again and they wait because they could have bought stocks lower. It's endless procrastination. What I said at the top of the show, I don't think people heard this part, this is why I always stress, it's not timing the stock market. It's time in the stock market. It's patience. It's discipline. That's the important ingredient that it takes to be a successful investor. Not thinking that you're going to zip in and out of the market every time we go into a bear market. So I've been talking about upgrade on the downgrade. That's when you take the stocks a lot of the stocks or some of the investments you have that you didn't think were good or that you thought were great, now that they're not so good, you get rid of them. Let them go. Kick them out. Sell them. Forget about how much they're down. It's where you're going that counts, not how much a stock is down, and replace it so that money will still be in the market, potentially working for you, but upgrade. Get into the highest quality stocks. Sometimes you don't know what the highest quality stocks are until something in the economy breaks, until we go into a recession, until we go into a bear market. And then you really see what's good, what's not, okay? So by no means should you think that just because the market had a big rally today, that you should think you missed the opportunity. Stocks are still down a lot, and on a lot of individual name stocks that are down so much. Okay, it reminds me of an old expression, and I use it a lot. I'll share it with you now. I'd rather pay up for a good company than pay down for a bad company. Okay, I'd rather pay up for a good company than pay down for a bad company. It's kind of like people who are very overly frugal. They know the price of everything, but they know the value of nothing. Let's look at some headlines first. Mike Mayo, noted bank analyst, says banks have fallen to crazy levels. An analyst at Goldman Sachs, in one of the bravest things that I've ever seen on Wall Street, upgraded Boeing. It was up yesterday in a down day, and Boeing was up like another 20% today, saying that the airline industry will survive, bailed out or not. Boeing's customers will be saved. And maybe that stock was just down too far. Boeing's asking for some aid, but it's also so Boeing could keep paying its suppliers, because Boeing knows that if its suppliers go out of business, then what's Boeing going to do to have for parts, fuselages, wings, seats, etc. B of A analyst and quant Savita Subramanian. Okay, time to separate the wheat from the chaff, go into the quality, kick out the bad stuff. This is what I've been talking about now for the last couple of weeks with you. David Tepper said yesterday that he has turned into a buyer of stocks. I'm reading from my notes, as you can tell. Tom Lee, noted analyst, very known for his astute market calls, sees the S&P 500 back to 2,800 or higher by year end. And Marko Kolanovic, JP Morgan's quant strategist, okay, we could see the economy rebound in a matter of weeks, and we could see stocks hit new record highs by early next year. I mean, there are just a lot of really positive things about this day, and it makes you think, if the Feds come in with stimulus, trillions of dollars, which could be leveraged into even more money, if they're going to pay for the economy, I think it was a mistake for people to sell out of stocks. And now that they realize it, they're rushing back in. That's the lesson for today. Okay. I've been saying this since last Monday of last week, when I made my very gloomy assessment of a worst case scenario, that I actually said that day, I am actually a buyer. I've started buying stocks, and I bought through last week, through yesterday, and I'll probably continue to do so. We'll see. Okay. We have some bad news still to come out. Thursday this week, the first-time jobless claims are coming out, and those are expected to go into the millions. It's going to be a shock. But if we all know about it, and now what's getting factored in is how bad the coronavirus is going to be in New York and elsewhere. You know, investors have a funny way of assessing what's the worst possible scenario. Doesn't mean the most likely. And then when things aren't quite as bad, investors get bulled up and they buy back everything they sold. I think that's what we're seeing now. So I think this rally today is pretty significant. I think it's sticky. I think it could stick around. I can't promise we've seen the bottom, but if we get this Fed stimulus tonight or tomorrow, even if it takes a few more days, my sense, we saw the bottom. That's my sense. That's a pretty bold call, but that's my sense. Okay. Open-ended Fed stimulus. We spoke about that. And now we know what the bad news is going to be. We know how bad things could be. We'll see how the social distancing works, the quarantines. A lot of states have now basically closed to keep people inside and away from each other. If it works and we start to bend the curve a little bit, hopefully we won't get complacent and rush out again and then spread more coronavirus. But if we can lower the curve a little bit, flatten it, and you start to see those numbers go up slower for the the virus and the death rate, well, that's another bullish thing for the economy. Okay, as terrible as it is for the human tragedy, I'm not trying to make light of that. We also talk about personal finance here in the show. So I've already wasted a good 4 or 5 minutes of your time with the volume not working, the audio. I've never had a problem with the audio like that before. I did once do a live stream and I forgot to unmute the mic for about a minute, but we caught that pretty quick. But I've done about 50 live streams by now. So I'm working on it. What I want to say is, over the long term, the difference between volatility and risk is this. If your investment time horizon is 10, 20, 30 years out, the ups and downs of the stock market, bear markets included, it's volatility. It's just part of the process. It's just the natural ups and downs of the market, and you get through it. Risk is the volatility of the market when you don't have a lot of time, because then you may be forced to liquidate shares of investments when the market's down, and you won't have enough time to recoup your paper losses. That's what risk is. Risk really is first determined by time horizon. So when I sit with a client and I assess time horizon, risk tolerance, financial goals, the time horizon is the first thing that I use to measure someone's risk tolerance. It's not the only thing, and there are a lot of other factors that go into it, but most of all, it is the time horizon. Okay, there will be more tough days, but I think there are going to be more good times ahead than bad times, and I think you'll agree. Thanks so much for watching. I'm going to end this live stream now. If you have any questions, let's see if anybody does have any comments or questions in the comments. Where have you? We've got a couple of comments. Let's hope they're not all just about the volume. Thank you, Eric. Ivana, Ivana, you've been a big help. I really appreciate it. Brad, thank you. Robin, okay, thank you. You hear us now. Keith, we got it. Good to go. Thank you, Keith. By the way, Keith Wilson is in the comments here. It creates great content. You definitely want to reach out to him and connect with him also. It's not you, man. It's just the way it is. It's just that it's one of those things today, okay? And if anyone's out there in Facebook land, I just asked a whole bunch of people to join me on Facebook. Okay, let me get rid of that volume. All right. I think people in Facebook could hear me. From your lips to the market's ears. That's right, Russell. I love that expression. Your buddy a little late here, but you look great. Thank you, Carlos. Then you say 90% upside volume day. Okay, I thought you said I look like I'm 90. Hey, man, you're the one who lives in Florida. Ooh, I can't believe I said that out loud. Okay, Bobby Ross. Good to see you, buddy. All right. I'll speak to you guys soon. I'll figure out this audio situation. I'll have it all done for tomorrow, and it'll be a nice presentation. Thank you. I greatly appreciate your taking the time.